Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 930A, and today's date is March 28th, 2016, and the title of the episode is The Central Bank is Losing Control of the Economy as More Indicators Point to a Collapse. Let's get right into the economic collapse financial news. Now, here we are coming to the end of March, and when we look back to January to now, we see the economy. And I'm talking about the real economic indicators, not the manipulated statistical numbers that the government throws at us. I'm not talking about the stock market that they completely manipulate. I'm talking about what's really going on here in the U.S. Now, of course, we know the U.S. government central bankers, they're not going to tell us the truth. They're not going to tell us, oh, we're in a recession, we're in a depression, we're collapsing. Actually, they're not going to say anything until it's too late. But we notice from everything that we've been looking at is that things are rapidly falling apart, and there's no way really for the central bank to stop it. Yes, they can manipulate certain statistical information, they can manipulate the stock market, but it's getting more and more difficult as time goes on, and we're starting to notice this. And if we notice here in the U.S., the number of working age Americans that are officially unemployed is around 8.2 million. And if we add that number of working age Americans that are considered to be not in the labor force, well, that number is about 94.3 million. And when you add those two numbers together, we're looking at 102.5 million people who want to work, who want a job right now. And when you look at only Americans that are aged from 25 to 54, we see 23.2% of them are unemployed, and the inactivity rate for men in their prime working years, it really has exploded higher during the last recession. And guess what? It didn't go down since the last recession. Actually, it continued to go up. Even after they told us that we are completely recovered and unemployment is at 4.9%. And right now it is hovering at near all-time highs. And the inactivity rate for ages 25 to 54, if we look back and we go back in time, back to 2008, we were around 9.2%. Well, since that time, where we had the Great Recession, to now, we are at 11.6%. For women, we see the same exact thing. Back in 2008, it was roughly around 24.2%, and since that time, it has skyrocketed to 26.1%. So actually, it's gotten worse, not better. And how can this be if we're in this recovery? Well, we're not in a recovery. The whole thing is a complete illusion. And they're just trying to convince everyone that everything is fine by keeping the stock market up and gold suppressed and manipulating all the statistical information. And what we're seeing is that spending here in the U.S. is continually declining. And what we're seeing year on year is that income growth has slowed to 4%, near its weakest since November 2013. The spending growth slowed to 3.8% year on year from 2.9% in January. But the big thing that we have to look at right now is a major downward revision in spending. January's 0.5% surge in spending was revised to a mere 0.1%. And when we look at the U.S. personal income, we see that we are on a downward trajectory. It is not getting better whatsoever. Now, why aren't people spending their money? Well, as more and more layoffs occur, and as more and more people fall off the job market, as more and more people get part-time work, they're nervous. They don't have the extra funds. They're trying to keep whatever they have. They're barely getting by paying their bills. And the people that are still working in the companies, they're hearing rumors of more layoffs. They don't know if it's going to be them, so they're not ready to go out and spend their funds. Everyone is nervous. And this continues on. Now, the U.S. government central bankers are trying to convince us that February pending, that's the important word, pending home sales rose 3.5% month on month. And it beat all expectations, but you have to remember, these are pending. A lot of these contracts fall through. They don't follow through. And this number is then revised much, much lower later on. Just like we see all the other numbers that are continually lowered. But when we look at housing, for instance, and we look at new construction, where they continually tell us that new construction is just booming everywhere, and we get these surges, and then all of a sudden the next month it just drops off, and we see it really doesn't go anywhere. But when we look at new home sales, we see prices are rising much faster in the more expensive segments, leaving those in either starter homes or still the lower tiers unable to make the usual jump that accompanies economic mobility, because they aren't buying up. They aren't selling despite rising prices, which are supposed to signal at least stable demand. Now, when we look around the United States, into the East, into the South, into the Midwest, and the West, we see the middle to lower houses. They're still on the market. They're not really moving. And we're starting to see people continually lowering their prices because they're scratching their head wondering why my house isn't moving. And you would think, from everything the government is telling us, from the National Association of Realtors and all the builders, and if there is demand for starter homes, what should we see? We should see a huge amount of building all over the place. We should see construction happening all over the place. But when we look around the country, new home sales have been stuck around the level since the start of 2015 and really haven't gone anywhere. And when we look at new home sales, and we go back to, say, 2011, even before that, right at the time we had the huge crash, we see new home sales went all the way up to 30% by 2013, and then dropped down to negative 5% in 2014, shot back up to 20% around April, July of 2015, and came right back down to zero in 2016. So new home construction is not on the rise. And actually, when you look at the graph, we are in a downward trajectory. We have not hit the mark of where we were in 2004, 2005, 2006. We're not even close. And the gap from resales suggests that home builders should be nearing a frenzy at this time, constructing at a pace more toward the upper end of the historical range rather than continuing along the bottom. Only there isn't any rush to build and sell new dwellings, because we don't have a housing boom. This was manufactured to convince everyone that we have a housing boom. And all they did to do this was the banks were told, listen, keep the houses off the market. If there's a foreclosure, keep a lot of them off the market. Let the people live there. The Fed stepped in, bought up the toxic real estate, about $4 trillion worth. And the Fed gave the banks free money to pump up the stock market in the meantime, to make it look like everything is going well. Then they gave free money to the hedge funds, investment companies. Foreign investors stepped in, and they bought homes for cash. Now, they didn't buy one or two. A lot of the hedge funds, investment companies, they bought thousands upon thousands of homes, and they didn't sell them. They held on to them. They were said, listen, rent them if you can. Otherwise, just hold on. We need to drive up the price. And that's how you drive the price up. You keep houses off the market. You continually purchase. You don't put them back on the market, and you drive the price up. It's artificial. And while this was happening, the mortgage departments in Bank of America, in Chase, J.P. Morgan Chase, in Wells Fargo, they were laying off thousands of people in the mortgage department because they knew they wouldn't need these people, because the American people are sitting on the sidelines. And this started back in 2013 where we saw a mass amount of layoffs, and it's continuing up until today. So what we're seeing right now is that the housing market, the retail market, the job market, they've gone nowhere. It's falling apart. Now, the Dallas Fed, it has contracted now for 15 months in a row. The Dallas Fed survey came in at negative 13.6. They were expecting a negative 25.8. So I wouldn't really count that as an improvement. We're in the negative range, and it's been contracting for 15 months. And we haven't seen this since 2008 during the recession. New orders and employment have tumbled. And anyone who says the economy is not in recession, I think they're peddling fiction at this point. Now, it looks like the Atlanta Fed came out with an estimate for the first quarter of GDP, and that estimate came out at 0.6%, which is absolutely awful. And remember, they throw in Obamacare, they recalculated the numbers. It's becoming harder and harder to convince everyone that this economy is doing well. Deutsche Bank chief economist Robert Koopman, and he is out there saying that several years in a row of currency wars, it's not working. The GDP growth is hardly robust. Before the recent downturn, the last time trade growth underperformed the rate of economic expansion was 2 decades ago. And when we look at this, the trade growth has averaged just 3% per year. That's half of the 1983-2008 average. And for global trade, it's a complete mess. I mean, look at the Baltic Dry Index. Yes, it has gone up a little bit, but when we look at the graph and we go back in time from the Baltic Dry Index, you can see how bad it is. If we start and we go back to 1989, the Baltic Dry Index averaged around 1800. 1989 to about 2003, we're around 1800. And it shot up 2003 all the way to 2008. And we went, 3,000, 4,000, 6,000, 10,000, all the way up. And then during 2008, 2009, it dropped all the way down to its lowest point, about 690 or so. Then it was pumped back up from that point. And when we look at the graph trend is declining. We are at around 406 points right now. We are at the point where this entire thing is falling apart. It is worse than 2008. We're way below that. We're way below 1985. The whole thing is a complete mess. The Merchandise World Trade Monitor by the CBP, Netherlands Bureau of Economic Policy Analysis, is saying that global imports and exports by volume and by unit price in US dollars is absolutely awful. It has declined by 0.4% from December. And what we're looking at right now, in terms of prices per unit expressed in US dollars, world trade dropped 3.8% in January from December and is down 12.1% from January a year ago, continuing a rout that started in June of 2014. So what are we seeing here? We are seeing that everything right now, when we look at this, is much worse than 2008. It is not getting better whatsoever. Actually, we're below the statistics of 2008. All the indicators back then were way below it. So where has this economy improved? Show me a true improvement of the economy. Not a bubble improvement, not a manipulated improvement, but a real improvement. This is why the government has to continually come out there and say, we're improving, everything is better, and if you don't believe us, well, you're peddling fiction. Well, we know for a fact You don't have to convince us when the economy is doing well, because when it's doing well, we all know it. We all feel it. You feel secure in your job. You see retail expanding. You see global trade expanding. People get jobs. People have money. People go out and spend. Mortgage departments do not have to get rid of their employees. Corporations don't have to get rid of their employees to buy back stocks. Retail stores during a holiday season don't have to close. You don't see this in a true recovery. You see this in a fake recovery. And this is why everyone at this point needs to be prepared and ready for what is coming, because it's not going to get any better. It's only going to get worse, as we've been tracking this all along. You still need your food, your clothes, your medical supplies, a weapon to keep your family safe, cash on hand, gold and silver. If you haven't started, you can go to lifereliance.com. They have seeds, they have pre-made food, they have bug-out bags, they have water filtration systems. Whatever you need to get right now. You need to be prepared for what is coming, because as we can see, things are getting worse and worse as time goes on. And they're not going to get any better. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.